Hello, everybody. Rombo here. I hope you guys had a good day. Some stocks did well and some didn't. But, that's the market. You have a president speaking, and you never know what is going to happen when they do that, or, someone from the Fed or something like that is talking. But overall, it was, kind of a boring day for me, actually. But, um, let's get into it here. AMLH. Haven't talked about American Leisure for a while. Obviously, a really big drop. Well close to over 100% from this move right here. So that usually means it's going to be kind of rough. But it had actually a pretty good bounce. And today, what we finished up 11, over 11%. We hit that -1 deviation and came back down, and now we finished at 002. So overall, not too bad. It looks like we kind of broke this trend line here. This is a wolf wedge actually. There was a bearish bat pattern, which is pretty aggressive, and boy, it just about got down to the third target here for the bears. So they did a pretty good job down here. Might not be done. This might come back down and retest this uh, before it starts the upside. But it went way past the the 3.5 deviations up. So now we're down to the 2 deviations down here. Overall, it is still an upward pattern. So not all too bad. So we'll keep an eye out on AMLH. I might get a little excited about it once we break this area of consolidation right here. If you did get in it down here, that was a pretty good job. You could coast into the new year with that, I think. But yeah, if we break the 0023 area right here, AMLH might do something. Next, we have SYBIL. SYBIL with a 4.6%. Not going to complain about that. Ended up in the green here. Still below the downward pattern though. So I don't care. Blue, red, blue, red. If you notice, I don't care. Not until it breaks this line. It could do whatever it wants. When it breaks the line, you know, uh, breaks this downward line here, comes up, and then I'll wait for a pullback as long as it is higher than the previous low. Starts to come up, then that's where I'd get in, something like that. All right, I want to see it set a higher high right here. Here's a higher high, and then here's the low, and there's your second low right there. Once it creates that scenario, and then I know we're coming back in because guys, the way you read charts sometimes, here's dropping, all of a sudden you have this one blue day right here, and you're like, hey, look at this. Okay, well, it came back down, and I'm going to get in here because I'm going to buy the dip because look how low it was, and we're still above, this day. Well, yeah, but here's your high. Here's a lower high. Here's a lower high. Here's a lower high. Here's a lower, and you're getting all excited about this move right here. And okay, now finally, oh here, we got the dip right here. This is good. Well, yeah, lower high, lower high, lower high. Wait for the trend to break, you guys. You don't see when you need to be the first one in on the lowest, on the lowest part of the dip. Well, yeah, that was the lowest part of the dip right there. You want a cookie because that's going to be an expensive cookie because now instead of waiting, you buy in at 0.4, and now all of a sudden we're sitting here at 0.224. So just calm down and wait things to go your way. Next, FERN. Well, I can't click on FERN if I don't have that on there. FERN. Hey, I'm in FERN right here. Got a little FOMO, but I I have a date night. Not even a date night on this right now. It's just more or less to keep it on my radar. Um, what? Let's see here. I am all right. I'm down $25. So okay. I'm not sweating it. But uh, we in general it stays between the upper one deviation and the lower one deviation. And now we're working our way back down. The negative one deviation's a 0.206. It looks like here we have support just above there before, so we might have seen the bottom for FERN right here. That would be nice. We are though still We're still well below on the downward trend line. If you want, I might put in $100, here tomorrow or something like that. And maybe we'll consolidate, come sideways, and then break to the upside. And if we go down further, I'll probably stop out right here, zero, at 0.197 or so. And if it tests this, bounces off, and breaks up, then I'll probably put in a lot more once we break the 0.27 mark and start putting in higher highs and higher lows. Same with ILS, you guys. I hear people, that's where I got out right here. And I'm just, everyone, oh, here we go. No. Oh man, look at this dip. We're never going to see these prices again. Here we go. Oh man, just today, guys, we got in at 3072, and now look, it worked its way back up, and then we finished at 32 or whatever. This is hypnotizing you. It's called straddling. That's been going on since the 7th of December. People buying in here, and next thing you know, well, now we're at 3.2, and then tomorrow we might be at 3.0, and then the day after that we might be at 2.8, 2.892. Well, we're still, if anything, here's the trend line, and look where we're at. We're going away from the trend line. We're going this way instead of getting closer. So let's just wait and see where it stops. It could have stopped right here. This could be the low, because here's some support right here at 0.2927. Great. Well, but you don't know that that's the low. You only know when that's the low when you're going away from it and you're starting to go up. And that's what I wait for, because I don't need to be the first one in, right? Because here's the first one in right here. Well, okay, now I'm the first one in. Oh, well, now I'm the first one in. Hear that pattern going? Oh, first one in, first one in, first one in. Don't be the first one in. Be the one that is in where it makes sense. It breaks the downward trend line. It breaks, get a little retracement, starts going up. That's where you get in. Right? Or a little more conservative, here, this is a resistance line here. Wait for it to break resistance, come down, test it, bounce, and then you get in at 0.35. See, now when you wanted to be the first one in, right here, you're up at 3.75. Well, you could have waited all this time, whatever, half a month, use that money for something else, come back, revisit ILS, you get it, then you could have gotten in here actually cheaper than when you thought you were in there holding bags. Well, now you're in here, but now you're in here knowing that the price is going up instead of guessing and still trying to be the first one in. And then, because that makes your chart look like this, and you don't want that. So just, whatever. Next one is a new one here. They wanted to look at is OWUV, and oh my, oh my, oh my, what a great run that this thing has been on. Um, and if you're in it, man, that's awesome. If you're not in it, don't get FOMO. Just there's 9,000 other stocks out there, guys. If you want to wait for a 50% pullback, but remember, I call it kind of like the mirror, okay? Whatever goes up that steep usually goes down that steep. All right, so just flip that move around. See this right here? Okay, now just flip it around, and here's all this red day, red day, red day, and then there's a couple blue days in here, red day, a couple blue days, and then next thing you know, you're down here again. Okay? So now that doesn't necessarily mean that that's what's going to happen here. I'm not a financial consultant. I'm just an old man in a dark room looking at 3 monitors. So take it for what it's worth. This could go to $5 for all I know. I don't know anything about One World Universe. Sounds like it's probably some meta thing, right? So meta universe thing. I don't know. But if you really want to get into it, please just put some pocket change into it. Don't put in half your portfolio into this thing. Lord forbid you put anything crazy like that. If you want a tenth of your portfolio at the most and have a tight stop loss. Let's see that the average trading range is 0.06 cents. Today the trading was daily trading range was 13 cents. So take that for what it is. The average candle, the last 5 candles is 8 cents. So maybe put a 4-cent stop loss on it, and put a small amount in there, a date night, as I call it, whatever your date night is. If it's a date is $100, it's $100. If your date is $20, McDonald's drive-through, hey, and there's nothing wrong with that. Then put in $20, but don't put in half your portfolio and then have it go down 80%. Just please don't do that. But it could be fun just putting in a day night and see what happens with it. Next one that we haven't looked at for a while is SPQS. Wherever that is, there it is, SPQS. And here I call it the Batman. Double top. There's a big old bat ears right there, right? And Batman. And that's what happens. As soon as I saw that, I think I did the video about right here where, I warned people that this could be going down. It is. It had some fight right here. It bottomed out right at support right here. I really don't see it stopping there. It tried right here also. It hit it twice and then it broke through. And that's probably where it's on its way down. So these lines, obviously, if I extend out, we're looking at 0.0044 area. Could I be wrong? Yep, sure could. It did bounce right here at the -1, just below the -1 deviation, and made a move up. So we're about here again. Here's just below the -1 deviation. So we could bounce right here and work our way up also. Overall, we are in an uptrend. So we might want to take a look at the, around this area. Now, horizontally, this is 0.0062. But deviation-wise, we're looking probably at around 0.0069 area. If you see it bounce, hit 0.69 and stays above it, well, maybe that might be a time to test the waters and see if it starts breaking up from there. If it starts breaking up and gets above, the 0082 area, then yeah, you might want to put some more money into it. That would be a smart play. So nothing wrong with that. And last but not least, again, toner. Remember, steep up. Look at that. Boom, steep down. Steep up, really steep down. Steep up, steep down. And now we're in a wolf wedge pattern here. It's not the best wolf wedge pattern, but it is a pattern where it sets up a wedge. It's a descending wedge, which is bullish. That's good news. But in order for it to do that, it has to go up, which it did. It has to go down, test that area, which it did. Came up here, the fourth one, that's good. And now, if you're in it, it's sad. And this is hope, because it doesn't mean that this is going to happen. But one of the rules is you want to see nothing but red candles all the way down, and you want to see it get below this wedge. You want to have room from the end of the wedge, so you don't want it breaking like right here. You want to see it break the wedge at least 2/3 of the way down, so somewhere around here. So this is good news so far. Nothing but red candles. That is good. You want to see nothing but red, because any kind of blue in there on this way down is going to give you a resistance on the way up. Okay, so the thing is, you get it to break the candle, or I'm sorry, this wedge area right here, and then as soon as it breaks back into this wedge, it'll probably get what they call an ignition candle, and that then means it goes up. Now, this dotted line between the number 1 and number 4 area, that is the wolf wedge target price. I think I mentioned this before. Matter of fact, I know I have. The end of the wedge, you come up here, that's where it should meet the target line, is right here, if it breaks the wedge early. Obviously down here it's not going to work out. But usually 2/3 of the way down, if it breaks according to the pattern, it should get there about that time. And again, this one has it ending in February 7th. And we're looking at a price of 0.014. I'm sorry, yeah, 0.144 area. But again, if this happens all the time, this wolf wedge, everyone would be using it and we'd all be billionaires. But it does hit more often than not. So, and sometimes it doesn't, it works, but it doesn't get all the way up and meet its target price. And it usually is a good sign if you see a wolf wedge on there. Some kind of bullish action, eventually happens. We might not get all the way down here, and we might break up here a little bit, and do something like that. But we definitely want that, at least. This is the trend line. We want to see that broken. That's the secondary. This is the primary trend line right here. We got a long way to go before we even think about some kind of big move coming up here. So so that's what I got with for toner. Again, you guys, hope you had a really good day, and looking forward to tomorrow. And I hope you guys had a green day today, and we'll see you tomorrow. And let's make some money so we could buy maybe a little bit extra nice Christmas gifts for everybody here this week. Yeah, I know you guys probably already have your stuff bought, but yeah, not me. I'll be out. See, it's Saturday, so Friday night or Thursday night I'll be out. Mall of America though, so I got a good excuse there. So okay, you guys, take care. I blabbed on enough. Bye.